let's also see what's going on with Hewlett-Packard and Palm, because following HP's announcement that the company's buying smartphone manufacturer Palm for $1.2 billion, some are wondering whether this is a smart buy. Here to talk about the acquisition is Michael Cuggino. He's portfolio manager of San Francisco-based Permanent Portfolio Funds, which owns about 520,000 shares of HP. So, Michael, thanks for coming on to talk to us about this. First of all, here, I know that you're an HP shareholder and not a Palm shareholder, but Palm shares are up today above the offer price. Does HP have a fight on its hands for the company?
Too early to determine, but my view on situations like this would be they're never closed until they're closed, and that's expected to happen sometime in July. So I think between now and then, the Palm board has an obligation to get the best price and value for its shareholders. I'm sure they're going to do that. From HP's perspective, keep in mind they paid I think it was about a 23% premium to the trading price right before the deal was announced. Potentially pretty rich given Palm's difficulties in the marketplace, and I think it reflects the fact that Palm and its technology have a lot of potential unfilled at this point with respect to WebOS, and maybe HP can unlock that value. So from that standpoint, it might be a bargain price in the longer term for HP and fills a hole in their product line. So that all remains to be seen. I think we take it one day at a time and see how it goes. We as holders of HP like HP for the long term regardless of this deal.
Well, when you talk about the plugging the hole, I mean, that was a significant, maybe not money-wise a significant hole, but a significant sort of public relations hole, because the phone that HP came out with didn't really go anywhere. Are we entering a phase here where a computing company can't just be a computing company and a phone company can't just be a phone company, that you have to have this integrated entity?
Well, I think that that's definitely true on both counts. I mean, I think a lot of things are integrating, and the more business lines you're in, the better you're going to be as a diversified technology company, which HP is. The device you're referring to, I think, was the iPad, and yeah, it never really took off. And there's a lot of competition in this sort of smartphone, mobile computing marketplace, whether it's Apple, RIM, or any other device. The Palm device as well hasn't gotten traction in the marketplace, which is part of the impetus for this deal. What this does is it gives HP a lot of access to technology, gives it a second chance to fill this hole in its product line. It's not a significant player in this mobile computing, smartphone business yet, and this might get it to the point where it can be, but there's still an also-ran at this point, even with this technology. It's going to need some new investment in this business by HP.
And Michael, you talked about access. How important was that? Was that the thing that needed to put HP over the hump, the access?
Tough to say at this point. I mean, I think from our standpoint, this is a weakness in HP's business model in a sense that it's an area that's growing in the technology marketplace that they are not a significant player. So I think from that standpoint, it's a relatively cheap price, potentially, given the leverage or the benefit that they may achieve with respect to buying this technology and the intellectual property associated with it. But I think it's a longer-term business development issue. It's going to take HP time.
And Michael, might I ask, is this a question of both of them will do better together than they did apart?
It may very well, in fact, be. Yeah, I think that's the long-term focus.
Just quickly here, Mike, as well. I mean, I've been doing some reading about Palm, not just today, but over the past several months, and people really had a lousy view of this company, not just its financials, but the actual products, its marketing, pretty much top to bottom here, besides just the WebOS system. So, is this something that HP can even salvage, even if it is going to take time?
Well, there's a reason that Palm was trading at 4 and change, and it was declining from a higher level in the single digits. It was a low-price stock declining. I think it's a little bit more nuanced than that, Julie, though. Technically, the WebOS system was receiving some better reviews from a technology standpoint when it was released. The problem was that Palm, as a standalone company, was having difficulty getting the marketing breadth that it needed, getting the product sold, getting the distribution arrangements, getting it accepted by users with so many other alternatives out there. What HP gives it is a marketing presence that may help it.
All right. Unfortunately, we're out of time. Michael Cuggino, portfolio manager at Permanent Portfolio Funds.